June 28, 2026. And yeah, the chart looks like a knife. Let's get into it. Quick shout to today's sponsor, Compete Token, the gaming crypto that actually has real games you can play. Links in the description, go check it out. Michael Saylor wants more Bitcoin while his own stock is on fire. And honestly, you have to respect the consistency. Strategy's common shares closed Friday at $82 and change, down almost 27% on the week, and the preferred stock, the thing that's supposed to trade near $100, slid all the way to $71. That's a 29% discount on the safe piece of paper, and Saylor's response was to tease another buy. Meanwhile, Grayscale's head of research went on X and basically begged him to sell $3 billion worth of Bitcoin to cover the next 2 years of cash obligations. Reminder, Strategy is sitting on 847,000 Bitcoin and owes roughly $1.2 billion a year in preferred dividends. Saylor reading that tweet and ordering another 500 coins is the most Saylor thing that's ever happened. Bitcoin just lost $60,000, and Ether is down 25% on the quarter, and the dinosaurs over at CNBC are doing a victory lap. BTC traded around 59,900 on Sunday, down almost 7% on the week, on track to close the second quarter down 12% after a 22% first quarter dump. That's only the third back-to-back red opening half in Bitcoin's entire history. The alts got dragged harder, Ether at 1567, Dogecoin off almost 12%, Hyperliquid down 10.5%, XRP down 9%. The drivers are the same boring macro story all month. Spot ETF outflows, a hawkish Fed under new chair Kevin Warsh, a screaming strong dollar, and capital chasing AI chip stocks instead. Fine, Bitcoin's done this before. The people who panic sell at the bottom of Q2 are the same people who will FOMO back in at the top of Q3. The European Union is about to take 12.5% of your annual revenue if you mess up MiCA, and they want you to thank them for the structure. The European Banking Authority published a framework Friday that lets regulators strip non-compliant significant token issuers of up to 12.5% of yearly turnover, 10% on e-money tokens, or twice the profits from the violation, just in time for the July 1st deadline. Binance posted over $400 million in net outflows last week and quietly withdrew its MiCA license application in Greece. Starting Tuesday, every crypto firm operating in the EU needs a regulator's permission slip or they have to pack up and leave. Europe spent 5 years writing this thing. Congratulations, they invented finance with extra steps and a fine schedule. The Bank for International Settlements says the $316 billion stablecoin market is breaking the global financial system, and you can almost hear the central bankers clutching their pearls in Basel. In its 2026 annual report, BIS argued that fiat-pegged tokens don't meet the bar for sound money and that the answer is, surprise, more tokenized central bank money instead. They specifically warned about stablecoin dollarization eroding monetary sovereignty in emerging markets, which is just a fancy way of saying people in countries with garbage currencies prefer holding dollars on a blockchain. Shocker. BIS also took another swing at public blockchains like Bitcoin and Ethereum being unfit for the monetary system. Cool, we'll keep using them anyway. Coinbase's base chain went down twice last week and the post-mortem dropped on Saturday. It was one sequencer bug doing all of it. An invalid transaction hit the block builder and failed, but the system forgot to clear out the leftover state, which froze block production for almost 2 hours Thursday and another 20 minutes Friday. Reminder, Base runs a single sequencer, same setup that's previously bricked Arbitrum, Optimism, and zk-Sync. We keep calling these things layer 2s, but a chain that one bug can pause for 2 hours is just a really fancy database with extra steps. Decentralize the sequencer or stop pretending. CZ wants America to be the crypto capital of the world. Yes, that's CZ, fresh off doing his time, and apparently right back in the arena. The Binance founder is publicly campaigning for the US to lean into a friendlier regulatory posture and take the global crown that the EU is currently busy fumbling. And honestly, the timing is perfect. Brussels is rolling out a 12% revenue guillotine on the same day CZ is selling America as the land of opportunity. The man who ran the biggest exchange on earth telling Washington how to win the next decade of finance is a plot twist nobody had on their 2026 bingo card. Samson Moe says the bottom is in and the rest of crypto Twitter is doing the press X to doubt meme. The Jan 3 boss called the floor around current levels, with Bitcoin down 18.5% in June and skeptical analysts pointing out that every sub-60 bounce so far this cycle has gotten faded. Look, every bottom call eventually gets a victory parade. It's just a question of how many people get washed out first. Mo's been right before, he's been early before, and he's still louder about it than anyone else. We'll know in about 4 weeks whether this was a galaxy brain top tick or another classic Mo moment. Japanese giant SBI just bought crypto exchange Bitbank for $289 million, and Architect Partners says this is what consolidation actually looks like. Japan's been quietly tightening capital requirements and licensing on local exchanges for years, and the smaller venues simply can't compete with a bank's balance sheet. Translation: while Europe is busy fining everyone and the US is finally getting its act together, Japan already finished the boring grown-up work and is now writing real M&A checks. The country that gave us Mt. Gox is now the one with the cleanest, most consolidated exchange market in the world. Funny how that works. Shorts are about to get vaporized at 67,600, at least, that's what the liquidation map is screaming. Analyst FLE is calling for a July rally to $75,000, pointing at a massive cluster of short liquidations sitting right above the current price like a magnet. And the seasonality backs it up. Bitcoin averages 7.6% gains in July across history, and in US midterm election years specifically that jumps to 10.3%. So either the chart watchers are right and we steamroll the shorts back to 75, or July goes against the script for the first time in years. I know where my bias is. Framework Ventures Anderson says crypto's next killer app isn't crypto, it's funding AI and robots. The thesis is simple: on-chain credit, tokenized GPU pools, and crypto Rails financing for the hardware build-out is the actual product that brings institutional capital onto these networks at scale. And honestly, this is the take that ages well. Nobody's gonna onboard a pension fund because of memecoins. They will onboard one to finance a billion-dollar GPU cluster with transparent, programmable collateral. The thing that finally makes real-world assets stop being a meme is the AI build-out needing more capital than TradFi can underwrite in time. And one more time, Compete Token, the gaming crypto with actual playable games. Link is in the description, go check it out. That's the day. Like, subscribe. See you tomorrow.